Good morning, everybody. And if you are a Cubs fan, this is a morning that you've been waiting for 108 years. Folks, welcome to the overnight action. It has been quite an overnight here in Chicago. The Chicago Cubs, they won the World Series, 10 innings. It was incredible. To say that was the way that the game was going to end, well, boy, I don't know. We were up until midnight, 1 o'clock here in Chicago. It's been quite the party, and it continues. But let's take a look at the markets. We want to see what happened in the markets overnight. Was it as exuberant and joyful as we had here in Chicago after a Cubs victory? Well, the S&P futures right now are hovering over basically flatline. You're seeing all the major indices flatline or slightly in the green, with the Dow, the S&Ps, and the NASDAQ, as well as the Russell 2000, all looking like they're going to open slightly in the green. Taking a look at crude oil is adding about 1% this morning at around $45.79 a barrel after a definite big pullback after the EIA report. Gold is down about 1.6%. When it broke that 1,300 level yesterday, gold really pulled back, trading at $12.87. So we see the overnight action basically flat to mixed. We saw the same type of activity in the Treasury markets, which we'll cover towards the end. As far as the dollar is concerned, the dollar is also dropping at its lowest levels that we've seen. And currently, right now, we're seeing bond yields. Let's see, the 2-year is down about a basis point at 0.81%. We see that the 10-year is up about 1 basis point to about 181. And we see that the 30-year yield is up about 1 basis point to 258, 2.58%. Now, pointing our attention to the equity markets in the Asian Pacific region, they ended mixed. The Japanese Nikkei was closed. It's a holiday, so that could have been a reason why the volumes and the activity was so light overnight. They have what's called Culture Day. Switching gears, though, actually, what I want to do is take a look at EWJ. I'm looking at the pricing right now. EWJ went out at around $12.50 last night. The estimated move right now going into today and tomorrow is around 30 cents in the ETF that tracks the shares in Japan. The implied volatility is running around 19.5%. Where does that fit as far as rank? It's on the lower end of implied volatility. For those of you that are new to implied volatility, that's just the options marketplace of way of forecasting potential movement in the underlying future movement in the underlying security. The implied volatility ranks right around 25%, so it's on the lower end of scale, which means that they're not having a huge heightened expectation of huge moves. One thing about EWJ is that it has basically about a 61% correlation to the S&P, so typically you're going to see that as Japan goes, so goes the S&Ps. There's a decent correlation there. We like to see the correlation coefficient get above 70% to say that there is a significant correlation between the spiders, SPY, and that particular underlying. In this case, it's EWJ. Taking a look at Hong Kong and the Hang Seng, it slipped about 0.6%. Now, we're getting into levels that we haven't seen since August, basically mid-August. You're seeing property names like Cheung Kong, Henderson Land. They all lost between 0.7% and 2.4%. Now, Hong Kong's manufacturing PMI, the Purchasers Managers Index, came in at 48.2. That's a little bit lower than what they had previously announced. And the September retail sales, they're pulling back pretty dramatically, down about 4.1% in Hong Kong year over year. The last was down about 10.5%. So we're seeing that the consumer might be pulling back in Hong Kong. Want to keep an eye on that. EWH finished the day yesterday here in U.S. markets. That's the ETF that tracks the stocks in the Hong Kong index, and it traded at 21.48. Pricing in the potential to move about 56 cents at this juncture. Taking a look at the Shanghai oh boy, it has been a long night. Take a look at China. The Shanghai Composite added about 0.8%. I'm seeing right now, and you're seeing as real estate names and tourism names under pressure. down about 6.3% to 9.8%. That is a little bit concerning. We want to see if that continues because right now we're going to see some volatility going into this election announcement on November 8th. The employment data that's been coming out of the region has been, and the PMI data has been relatively in line with expectations. So we're going to see how that plays out. ASHR is the ETF that I follow when I'm taking a look at potentially investing in Chinese stocks. And that closed yesterday in the U.S. markets at 24.64, pricing in the potential for today and tomorrow moving either up or down around 38 cents. Now, the current volatility in there is around 21%, and it has an IV rank of around 10%. So there's not a heightened expectation in the ASHR options market for huge violent moves, and it's not very highly correlated with the S&Ps. Taking a look at India, the Sensex lost about 0.4%. You're seeing Tata Steel and Mandara lose between 0.8% and 3.8%. These are two big names that are represented in the ETF that we track here in the States, EPI. We did see some upside in Motocorp, ITC, and Dr. Reddy's labs. They gained between 0.7% and 1.7%. So we're seeing some interesting action mixed, but to the upside in India. EPI closed yesterday at 21.24 here in the States. We'll see how it opens this morning. The estimated move right now is around 34 cents, either up or down. Implied volatility in the options in EPI, which tracks Indian stocks, the ETF, is right around 22% with an IV rank of around 42%. That means that it's in the mid-range of implied volatility. So while there's not an over expectation of huge violent moves, it's still getting closer to that range where there is some expectation. And it's pretty highly correlated, around 60% correlation with the spiders. Turning our attention to Europe. Currently, Europe right now trading mixed as I look right now at the pricing. Looking at the German DAX, it's higher by about 0.3%. We have financial names, Commerzbank and Deutsche Bank among the leaders. They both are up, gains right around 3.9% for Commerce and 1.8% for Deutsche. Financials have been under a lot of strain, but we're looking at the central bankers and the rhetoric that's coming out. I think there's a lot of questions about whether or not monetary policy or fiscal policy is going to be the answer. It looks like central bankers are saying we're moving away from monetary policy, in other words, rates, and we're going to start looking at fiscal stimulus and fiscal policy as the way to go going forward, especially now that they're seeing that there's a potential inflation risk that's starting to rear its head. Very interesting. We want to keep an eye on that. We did see Lufthansa also climbing about 5.3% as well, and so that's an interesting move for that airline. On the downside, we saw Adidas. It's been getting beat up in the session here in Germany, down about 7.7% after missing their quarterly estimates. So earnings are putting some pressure on this German stock, Adidas. I want my Adidas. I'm just going back in time, a little Run DMC. EWG is the ETF that trades here in the United States during our market hours that tracks the German stocks. The ETF went out at 25.51. It has a plus or minus into Friday of around 37 cents. That's what the options are pricing in. On the weeklies, the implied volatility is around 22% with an IV rank of around 44%. So while it's not really heightened, again, heightened is getting into that 60-70% range. It is highly correlated with the spiders. So as the spiders go, there could be some correlation there. And there's some pressure on a retail name, Adidas. We're going to keep an eye on that in Germany. Taking a look at the UK FTSE. Now, this is really interesting. The FTSE's right down about 0.3% right now in trading. They're still open right now. And they've struggled to keep pace with the other peers in Europe. And the reason being, UK Supreme Court came out with a ruling saying that Parliament must hold a vote before British exit. In other words, before they invoke Article 50 of the Lisbon Treaty. This is big. This means that they're going to put parliamentary members to an actual, you voted for this, so whatever happens, this is on your head. There's been relative weakness with miners and select consumer names. The most notable are going to be Randgold Resources, Anglo American, Glencoe, and Rio Tinto, all down between 1.1% and 6.7%. We also see Burberry, Diageo, and Unilever showing losses between 1.4% and 1.8%. So the UK, they're starting to really push, and now you have the UK Supreme Court saying that Parliament must have a vote before Article 50 can be invoked. The EWU, that's the ETF that tracks these stocks in the UK, went out yesterday at 1487. Right now, the weekly options are pricing in a potential of about 22 cents as far as moving up or down in this ETF. The implied volatility rank on this stock is around 46%, and the stock's running at an IV, an implied volatility of 23%. Why is this all important? Because, folks, when you start to see implied volatility increases, that means that you know that there's an expectation of heightened potential violent moves. That's why I'm pointing out to you, that's what you're not going to hear from other networks. And that's why it's important, so that when you see that a stock is moving and it's moving dramatically, you understood that before it even happened, that it was priced in there. Taking a look at France and the CAC, up about 0.8%. There's strength in financials. Now, financials have been weak in France in the previous weeks. They're picking up. As a matter of fact, Societe Generale, it's up about 6.8% after beating on quarterly estimates. Credit Agricole and BNP Paribas, I'm looking at them, both up right now around 2.2%. Let's see if that strength continues in the CAC on the close in France. Exporters Peugeot and Renault also have shown some strength. They were showing some previous weakness, especially after the latest polls earlier this week, showing Trump potentially gaining some ground on or getting ahead of Clinton. They rose about 2.8% apiece. Now, taking a look at the EWQ that tracks French stocks, went out last night at 23.79, so the stock is right now running at an implied volatility of 18.82. The rank is around 29, so on the lower end. Not a huge heightened expectation of potential violent moves, but there is some real positive action in financials. That's always a plus when you're looking for future upside. Italy and Spain, really basically flat. The most notable is that both their unemployment rates came in line or a little bit better than what was expected. Right now we have the Italian ETF EWI went out at 10.99 last night. IV's at 31% and the IVR is at 49%, so it's getting a little bit higher. Watched Italy. Spain, EWP is the ETF, closed at $26.99. The IV's at 22% and the IVR is at right around 22.5%. So again, not a lot of heightened expectation in that ETF that tracks Spain. Data that we're going to be watching, the October Challenger job cuts came out. It was down about 39%. Jobless claims, as I'm speaking, are coming out. I don't see those. I'll report on those on the opening bell that we're going to have at 9:30 Eastern time. I want to also watch the productivity number that's going to come out for Q3, September factory orders. I also want to watch nat gas inventories. Nat gas came into this session right now overnight and into the early morning hours down. Warmer weather here in the States. Want to watch nat gas, want to watch that inventory number. Let's see if it comes in as big as what we've seen with the inventories on crude. It's going to be interesting. So that's it with your overnight action. Thanks a lot for being here. We'll see you at 9:30 for the opening bell and what's hot now. Take care, everybody, and we'll talk to you soon. And Cubs, World Series champions. Who would have believed it?